friends, welcome to the channel JAIIB and CAIIB Made Simple. Are you appearing for the MSME certification examination? Then stop right here. Today we are breaking down the memory based question from the latest March paper. So at this channel JAIIB and CAIIB Made Simple, we have analyzed the exact pattern being asked right now from the new 3-year Udyam buffer rule to the specific 0.5% cluster concession. These are the real topics that are deciding the pass or fail marks this season. In this video, I will explain each solution in plain English, no heavy jargon, and I will give you my signature memory hack so that you never forget this formula during the exam pressure. Make sure to check the description for the full PDF of this question. Let's dive straight into question number 1. So this is the question number 1 on your screen. Consider the following statement regarding the operational guideline for public sector bank lending to MSME sector. Right. So which of the following statement is most accurate regarding specialized branches and cluster based lending? So this is the keyword. Specialized branches and cluster based lending. So option A, PSB are mandated to categorize all branches within a recognized industrial district as a specialized MSME branch, regardless of their current loan portfolio composition. Option B, bank may offer interest rate concession, such as lending at 0.5% below the MCLR to MSME within a cluster due to reduced cost of credit assessment. Option C, a general bank branch can only be designated as a specialized MSME branch if 100% of its total advance are directed toward micro and small enterprise. Option D, RBI strictly mandate that PSB must completely waive all the collateral requirement for any MSME operating within a recognized geographic cluster. These are the 4 options they have provided. Imagine that you are a bank manager. You have 10 different furniture makers, all located on the same street. See, think about it. Let me give you a pictorial way to understand this question. This is you, right? This is you are a bank manager, right? You have 10 different furniture makers. This is 1, this is 2, this is 3, this is 4, and so on, right? All located on the same street. So all of them are located on the same street. This is called a cluster. Okay, because they all do the same business, you don't need to learn 10 different industry. You already know how they work, what their risks are. Yeah, you know how they work. You know about their risk, who their supplier are. You know it very well, right? So this make your job easier. What it does, it make your job easier, and also it make your job cheaper, isn't it? So the question is asking, how do the bank reward efficiency? Yeah, the question is all about how do the bank reward this efficiency, right? So they are mandated to categorize all branches specialized MSME branch. Option number B, just now we have discussed. So if you look at the option, if you look at the option number A, it says that you have to categorize all branch into MSME branch, MSME specialist. So you don't need to turn every branch into MSME specialist. Only one per district is required, right? Only one per district is needed, right? Also, a branch become specialized when, please understand, what is the condition for branch to become a specialized MSME? The condition is that it's 60% of its exposure of loan should go to MSME, not 100%. It should not be 100%, rather only 60%. If it were 100%, the bank could not even give a personal loan to its own staff, right? So if you look at the option number A, it is telling that all branch within recognized industrial district as a specialized MSME. No, that's wrong. What about C? A general bank branch can only be designated as specialized MSME if 100%. Again wrong. I told you it is 60%. Now if you look at the option number B, yeah, the option number B, what they have done, when business group together in a cluster, like you might have heard about the leather hub in Kanpur, right? Leather hub in Kanpur, or you might have heard about textile hub in Tirupur, right? So when a business group together in a cluster, it is a win-win for the bank. Business group together as a cluster, it is a kind of win-win for the bank. So instead of running around the whole city, the bank officer can visit 5 factories in one afternoon. This lower the operational cost. Because the bank is saving money on inspection and paperwork. Obviously, the bank is saving money on inspection and paperwork. So they can pass that discount to the customer. Yes, they will pass that discount to the customer. Think of it like, bulk discount on interest rate, right? So banks are allowed to offer a lower rate, occasionally 0.5% below the MCLR rate, right? Because these businesses are easier to manage as a group. That's called cluster. Now you can appreciate this point. Yes, B is the correct one. Now what about D? D is all about the collateral myth. While the government love collateral free loan, there is no strict mandate to waive it just because of a location. Risk is still there, right? So D is wrong. If struggling with the 60% rule or the latest RBI circular, don't leave your MSME certification to chance. Our targeted MSME course break down this complex operational guideline into simple 5-minute module. Click the link in the description to action your full-length mock test, or you can WhatsApp me on this particular number. So what we learned, there is a memory hack that I will provide you to remember it. So to remember the specialized branch requirement, use this trick. 61 district. This is a trick. So 60 means what? 60 means they need 60% MSME business to be called specialized. To be called specialized, 60% MSME business is needed. 1 means at least one branch. At least one such branch must exist per district. At least one per district. Right? So think of the half percentage handshake. If you are in a cluster, the bank give you 0.5% handshake discount. So what we have learned? In this particular question, we learned the advantage of having a cluster, right? That is what this question is all about. Lower operational cost, it means potential interest rate concession. We learned the condition for a specialized MSME branch. I told you 60%. And district requirement. PSB, public sector bank, must have at least one specialized branch in every district. And collateral, so being in cluster does not make it easier to get the loan, but it does not automatically make it collateral free. Now, question number 2 on your screen. So an MSME unit is currently facing the financial stress, and the bank has initiated a holding operation while a viability study and rehabilitation package are being formulated. During this critical period, the borrower deposit fresh sale proceed into their cash credit account. According to the banking guideline for such a stress unit, how should the branch manager handle this deposited fund? That is the question. So what option they have provided? Let's have a look. Immediately appropriate the entire deposited amount toward recovering overdue interest and loan installment. Allow the unit to withdraw fund to the extent of the deposited sale proceed without using this specific fund to recover past due interest or installment. Option C. Freeze the cash credit account and transfer the sale proceed to a non-interest bearing suspense account until the final rehabilitation package is approved. Option D. Permit withdrawal of the fund only after a mandatory deduction of 20% toward the liquidation of outstanding penalty charge. So very good question it is. Let me explain what this question is all about. See, imagine there is a local bakery which is struggling to pay its old debt. Yeah, so you can think of it. This is like a local bakery. It is not paying its old debt. Okay, but still has customer buying bread every day. These are the customer. They are buying bread. So the bank has put the unit under holding operation. What bank has done? Bank has put the whole unit under what? Holding operation. You know what is holding operation? It is just like putting the business to ICU, intensive care unit, to save it. Now the bakery owner sell cake today, right? Suppose he sold the cake today. He sold cake and he deposited 10,000 rupees where? In their bank account. Okay, so he sold cake, deposited 10,000 rupees in the bank account. The question is, can the bank take that money to pay off the last year unpaid interest? That is what the question is all about, right? The borrower deposited fresh sale proceed. So how should branch manager handle this deposited fund? Can he take this money to pay off the last year unpaid interest? Option A, say immediately appropriate the entire deposited amount. Option B, allow the unit to withdraw fund to the extent of deposited sale proceed. Option C says, freeze the cash credit account, transfer the sale proceed to non-interest bearing suspense account. D, permit withdrawal of the fund only after mandatory deduction of 20%. Very good question it is. So now let me explain how to go about answering this question. See, if the bank take that 10,000 rupees to cover the old debt, which is option number A, the baker won't have money to buy flour and sugar for tomorrow. Obviously, he will not have money to buy flour and sugar for tomorrow. If they can't bake, they can't sell. If they can't sell, the business die. Obviously, if they will not be able to bake, and they will not be able to bake, they will not be able to sell. And if they do not sell, what happens? Business will die. Business will die. And the bank can never get its money back. So there is something called, holding operation. Think about it. There's something called holding operation. So it means the bank priority is to keep the heart of business beating. Yeah, the bank priority is to keep the heart of business beating. Okay, therefore the rule is fresh money in, fresh money out. This is the rule. What is the rule? Fresh money in, fresh money out. The bank must allow the borrower to withdraw those fresh sale proceeds to pay for raw material and wages. They are strictly forbidden from snatching this specific money to getting old dues. We want to keep the unit going concern. You're not familiar with this word, going concern. Now let's look at the option they have provided. So option number A, they have given that immediately appropriate the entire deposit amount. Wrong, right? If you grab the money now, you will kill the business. It is a short-sighted focus. If you look at the option number D, again it is taking permitted withdrawal after deduction of 20%. Again, this is wrong. Now option number C, if you look at, I think B what they have given, allow the unit to withdraw fund. Exactly. And C, freeze the cash credit account. No. Freezing the account is like turning off the oxygen you have given in ICU, and you are turning off the oxygen. Think about it. What will happen? Right, the unit will fall immediately, isn't it? So option number B is the correct answer here. So understanding the holding operation is critical for the MSME exam. But do you know the timeline for rectification and restructuring process? In our JAIIB and CAIIB Made Simple app, we provide a 30-day study blueprint that covers this high-yield topic with ease. Don't just study hard, study smart. Check out the link in the description to join our latest MSME brand batches. So now to remember how to handle this fund during stress, इसका एक memory hack, let me tell you that ICU rule. I means what? I means inflow. So inflow means what? Sales proceed. Inflow means sale proceed. C means what? Continue operation. C means continue operation. And U means what? Use for current need. Right. So no old debt recovery. So what I mean to say, inflow, sale proceed, continue operation, and use for current need. Think of it like fresh start filter. Fresh sale are for fresh expense only. So what we learn from this question, first thing we talk about the holding operation purpose to maintain the unit as a going concern. That is the meaning of holding operation. Second thing we discuss about the fund access. Borrower must be allowed to withdraw the fund to the extent of fresh sale proceed deposited. No appropriation should be done. Bank cannot use this specific operational inflow to recover past due interest or installment. Priority is providing working capital so that the unit does not shut down permanently. That is the priority. Okay. Now let's look at the next question that we have. So this is a very good question. The Ministry of MSME implemented a scheme that's called Micro and Small Enterprise Cluster Development Program to enhance the productivity and competitiveness of micro and small enterprise. Which of the following is not a valid objective or funded component of the MSE CDP scheme? Option A, creating or upgrading infrastructural facility such as power distribution, water supply, drainage in existing or new industrial cluster. B, providing direct self-funding opportunities and individual capital subsidy to single MSME unit for their routine operational expense. C, setting up common facility center, testing, training, effluent treatment, and complementing production process. D, building the capacity of MSE or common supportive action through the formation of consortia, association, or self-help group. Question is which is not a valid component. Think about it. Not what is given. Okay. So what do you think the correct answer is? Continuing to the explanation of the question, let me introduce you to our MSME certification course. In this course, you will get separate theory and MCQs PDF as per the syllabus prescribed by IIBF. We have divided it into F module. I think 6 modules are there. Inside each module, you get unit-wise content. Right, that too updated one. All the data are updated as per the current RBI notifications and circulars. Inside each unit, you get separate theory PDF and MCQ PDF. Moreover, in addition to that, you get previous year question paper, almost 10 file I have added, right, which caters to your need. You will be able to see which type of question have appeared in the recently held examination. And for quick revision, I have added some PDF, which you can easily take print out for your revision purpose. So you can check out the link in the description section, or you can WhatsApp me on the number provided on the screen to this question. So imagine a neighborhood of a small tailor. Okay. So there is a neighborhood of a small tailor. Let me show you a picture so that you can understand. This is T1, T2, T3. These are the small tailor. So individually, none of them can afford 50 lakh high-tech fabric testing machine. Okay, individually, 50 lakh have high-tech fabric testing machine cannot be afforded by anyone. So the government step in with a scheme that is called MSE CDP scheme. The government say the scheme name is MSE CDP. What does the government say? The government say that we won't give each of you cash for your daily fabric cost, but we will build a massive common workshop. Yeah, that is what the government say, that we will build the massive workshop. Okay, massive common workshop in the middle of your street that you can all use. Right. So the question asked is, which of the following does the scheme not do? Which of these does the scheme not do? Right. So if you look at the option number A is talking about the infrastructure facility. See, this is like building the road and a street light for the entire industrial area. No, that's wrong. What about option number C? It is talking about the common facility center setting. Do you think? So basically these are the shared tool. If 20 units share one expensive testing lab, everyone's quality goes up without each person buying the machine. So what about C? C is not the. See, question is not an objective. Think about it. Not a valid objective. So this is a valid objective. Yes, A is a valid objective. C is also a valid objective. Right. And what about D? Soft intervention. Here you can see they have mentioned to building the capacity of MSE for common supportive action. Yes, this is about teaching the unit to work together as a team. Yes, this is also an objective. But the question is which is not an objective. B says providing direct self-funding opportunity, individual capital subsidy. No, that's wrong. See, think about it. See, this MSE CDP, it is a community scheme. What it is? It is a community scheme, not a personal one. Think of it like a public park. Okay, so the government built the park. So this park is a kind of infrastructure. Right. This park is a kind of infrastructure built by government and put in benches and put in swings. Okay, these are the common facility centers, so called CFC. Right. However, the government does not come to your house to pay for your private garden soil or seed, which are called individual routine expense. No. If any single unit want money for its own day-to-day operation, it should look for a startup loan. Right. Or it should look for working capital, not this cluster scheme. Right. So if you look at the option number B, this is not the purpose. So that's why this is the correct one, because the question is asking not a valid objective. Right. Now, so mastering government scheme like MSE CDP, PMEGP, CGTMSE is a key to scoring high in your certification. In our mock test only, which include 500 plus updated MCQ that is specifically target these latest policy change. Download our app today and get instant access to our high yield PDF. So the memory hack is, let me just give a memory hack today to remember what we have discussed just now. So to remember what MSE CDP fund, remember the 3C. What is the 3C? The first is the common facility center, like shared big machine. Second is the common infrastructure, common infra, like road, power, water, etc. And the third C is capacity building. Capacity building. Okay, which means training the group. That's called capacity building. So the shortcut is that if the benefit is for one, the answer is no. If the benefit is for the entire zone, the answer is yes. That is what MSE CDP is all about. This is a collective growth and cluster level competitiveness. Government provide major grant for setting up the shared facility. Infrastructure include upgrading existing industrial estate. Individual units this scheme does not provide direct subsidy for the operational cost of single factory. That is the point to note here. Now let's see the next question that we have. Friends, historically the SIDBI was established primarily to act as a principal financial institution for providing refinance facility to bank and SFC. However, its mandate has expanded significantly over the year. In the current banking ecosystem, which of the following is a key objective of the SIDBI direct finance operation? Very good question. It's talking about, see, this thing is the unusual thing. They have just given you for your knowledge purpose, that's only. But the question is, what is the primary objective of the SIDBI direct finance operation? Option they have given that to provide direct retail consumption loan and housing finance to individual employee working within MSME unit. B says to exclusively fund large scale central government infrastructure project that benefit industrial corridor. C say to provide direct funding, venture capital, soft loan to emerging startup and innovative MSME that struggle to secure traditional commercial bank credit. D say to offer direct bailout package to large corporate house undergoing insolvency resolution under the IBC. These are the four options they have provided, right? What do you think? What is the objective of the direct finance? So let me explain. You can think of the CAIIB as the big brother of the MSME world. Yeah, CAIIB is just like the big brother of the MSME world. Originally, its job was to give money to the other bank so that it could lend to you. You are an MSME unit holder. But what happened, CAIIB noticed a problem. Imagine a brilliant young engineer. Imagine there is a brilliant young engineer. He started a tech startup. Okay, they have a great idea, but not factory or no land to give us security. Traditionally, bank often say no because the risk is very high. That is where CAIIB direct finance comes into picture. Think about it. This is where CAIIB direct finance comes into picture. So if you look at the option they have provided, so option number A says that retail loan to individual employee working with the MSME unit. See, CAIIB is not interested in your home loan or car loan. It's only care about enterprises. It does not care about retail consumption loan. No. A is wrong. What about B? To exclusively fund large scale central government infrastructure that benefit industrial corridor. See, these are too big for CAIIB. CAIIB herd belong only to a small and medium industry, SME, right? Large infrastructure is handled by other institutions. You might have heard the name of, NAFID. Yeah, you might have heard the name of IDBI. So this is also wrong. What about D? To offer direct bailout package to large corporate house? No. C is the correct answer. See, CAIIB realized that if it only gave money to other bank, right, the most innovative and risky startup would never get funded. In the direct capital finance role, you know what it does? CAIIB act like a venture capitalist. If you think about it, CAIIB act like a venture capitalist, right? It step into the ring itself and lend money directly to the emerging startup. It lend money to the emerging startup. Okay. It lend money to the innovative MSME, those MSME which are quite innovative. There is a scheme you might have heard about, the Smile scheme. Have you heard about it? Yeah. So these are those looking for soft loan. Those who are looking for soft loan with easy repayment term, that's called a Smile scheme. So if you look at the other option they have provided, the option number A say retail loan. No. CAIIB is not interested in your home loan or car loan. It only care about the enterprise. So that's why. Did you know that CAIIB role changed significantly after the 2006 MSMED Act? Most students get confused between refinance and direct finance. Don't be one of them. Our JAIIB and CAIIB made simple course offer short, crisp note on the evolution of financial institutions. Use the link in the description to join our Telegram group for daily free MCQs. So to remember the direct finance goal, think of the word gap. You can think about the word gap. G for growth. G for growth capital. When I say growth capital, I mean to say equity and venture capital. A for assistance. A for assistance for a startup. That's called, fund of fund. Have you heard about it? Fund of fund. And P is called, pioneer funding, which means funding what traditional banks are afraid to fund. So there is a shortcut. If a bank say no because the tech is too new or there is no collateral, CAIIB say yes through direct finance. So originally CAIIB was there for refinance purpose only, but it has expanded its role, funding a startup and high growth MSME directly. There is a scheme of CAIIB that's called a Smile scheme. Please note it down. Right? CAIIB Make in India Soft Loan Fund. Full form, I'm telling you what. And there is a scheme called SFS. That's called CAIIB Fund of Fund scheme. So I hope the concept is crystal clear now. Please hit the like button if you really think that this is helping understanding the concept. Now, very good question. As per the RBI Master Direction on PSL, bank finance provided to the cooperative or producer in the decentralized sector, specifically artisan, village industry, cottage industry, is eligible to be classified under which a specific target category? Small enterprise, micro enterprise, ancillary, agriculture ancillary, medium enterprise. Very good question. So imagine that there is a group of 50 women. Let me give you an example to make it crystal clear. So imagine that there is a group of how much? 50 women. Let me tell you, let me write it down. So there is a group of 50 women, right, in a small village who weave traditional handloom sari. In a small village who weave traditional handloom sari. They form a cooperative. What they form? They form a cooperative to buy yarn together and sell the sari in the city. When this group goes to the bank for a loan, the bank is very happy to help. Yeah, bank is very happy to help. Why? Why so? Because RBI give the bank bonus point for helping the smallest player in the economy. Yeah, RBI, they give the bank bonus point. The question asks, which specific bucket does the bank put this loan into to meet the government target? See what option they have given. If you look at the option number A, small enterprise. See, if you call a small and medium, this category are for bigger business, right? These are for the bigger business with more machinery, high turnover. So putting a village weaver in the medium category would be like, putting a featherweight boxer in a heavyweight ring. A is wrong. Medium is also wrong. D is wrong. And what about C, agriculture? See, while it is in village, but weaving or pottery is industry, isn't it? It is industry. It is not farming. So correct answer is micro. Yes. See, it is basically, RBI has a rule called priority sector lending. It basically tells the bank, you must lend a certain percentage of your money to the people who need it the most. Within that, this is a very specific sub target for micro, because artisan like pottery or weaver and village industry, they are the very grassroots level. RBI mandate that loan to them or even to their cooperative, they must be classified as micro. Even if cooperative itself is quite large, because the member are the tiny village producer, the loan stays in the micro. And what is the target? That is 7.5% micro target, micro lending target. Okay. Confused about the PSL target? You are not alone. The difference between 7.5% for micro and overall 40% for priority sector is a favorite topic for the examiner. In our course, we have a dedicated cheat sheet for all the RBI master direction. Download the app now to get your hands on the PDF. So to remember where village industry go, think of the route, right? Think of the route like artisan, like village industries, like cottage industry, right? This is called ABC. It is always be micro, right? If it sounds like something a person could do in their own home or a small village shed, it is always a micro. So what we learned? Target category, loan to artisan and village cooperative, they count as a micro. 7.5% rule, bank must ensure that their 7.5% of their adjusted net bank credit, right, should go to this business. And these include handloom, handicraft and village level production. It's called decentralized sector. Now let's have a look at the next question. So Mr. Sharma, the proprietor of a small manufacturing unit, submit a complete application to a commercial bank for a term loan of 22 lakh to purchase. Let's look at this question that Mr. Sharma, proprietor of a small manufacturing unit, he submit a loan application for term loan of 22 lakh to purchase a new machinery. Now to ensure timely credit delivery to the MSME sector, within what maximum time frame is the bank manager mandated to take a final decision, either approval or rejection, and communicate it to Mr. Sharma? 15 working day, 30 working day from the date of receipt of application, 45 and 60. So imagine Mr. Sharma has found a great deal on a machine that will double his production. He applied for 22 lakh loan. If the bank takes 6 months to decide, the machine might be sold to someone else, or Mr. Sharma business might miss the peak season. To prevent this, RBI has set a speed limit for the bank. The question is exactly the same. So now, what is that? There is something called, turnaround time, and this question is most frequently asked, TAT. So the government know that for a small businessman, time is money, right? Time is money. So remember, the rule says that for loan up to 25 lakh, okay, the bank has exactly 30 working day, okay, about a month to make a final decision, right? It is obviously about a month to make a final decision, right? And this clock start the moment Mr. Sharma hand over a complete application with all the required documents. So this is Mr. Sharma, right? He hand over application with all the complete document, all the required document to the bank. From this moment 30 days start. The bank cannot just keep the file sitting on the desk. They must either approve it or reject it. So what option number A says? 15 working day. This is usually too fast for a 22 lakh loan, as the bank need to check the machine value, Mr. Sharma credit history. However, very tiny loan under 25,000 are often expected to be clear in about 2 weeks. What about option? So A 15 days wrong, 30 days correct. C and D's are wrong. These are too long. By the time 60 days pass, a small unit could go out of business waiting for fund. So remember, time management is the key, not just for bank loan, but also for your exam preparation. Don't just stuck reading 500-page textbook. Our capsule course of the MSME summarizes every RBI mandate into easy to remember chart. Get the age you need to pass. Check out our link in the description section. So remember, for loan up to 25 lakh, use the monthly match. Okay, 30 days. So think of it like this, 25-30 rule. Okay, if loan is under 25, the answer is 30. Now, next question we have. Very good question. So an MSME borrower account has slipped into NPA due to the prolonged financial stress. The borrower approached the bank to resolve the due under OTS, one-time settlement mechanism. As per RBI guideline on recovery from MSME, which of the following statement correctly represent the mandate for bank implementing OTS scheme? Bank must ensure that OTS amount is recovered in a single bullet payment within 48 hours of approval, failing which the bank must immediately initiate SARFAESI proceeding. B. Bank are prohibited from offering any sacrifice or haircut on the principal amount for MSME borrower unless expressly permitted by the MSME minister. C. Bank must put in place a transparent, non-discriminatory, board-approved OTS policy, publicize the scheme widely among eligible borrower, and allow them a reasonable time frame to remit the settlement amount. D. The branch manager hold the absolute discretionary power to arbitrarily fix the OTS settlement amount and the repayment timeline without relying on any formal board approval policy. So this is a very good question, very intelligent question. So what do you think the correct answer to it? So imagine there is a shop owner. So let me give you an example to understand it. Imagine that there is a shop owner, okay, who took a loan, but due to long market slump, so there is a slump in the market, he could not pay it back. He is unable to pay. So the loan is now becoming NPA. The loan has now become NPA. The owner want to close the chapter by paying a lump sum that is less than the total debt. Yeah, he want to close the chapter. He want to pay lump sum, and that lump sum is less than the total debt. So this is called, OTS, one-time settlement, or a haircut. Either call it OTS or you call it haircut for the bank. The question asks, how should the bank handle this process fairly? Now look at the option number A. What option number A suggests? That 48-hour rush. Actually, demanding full payment in 48 hours is impossible for someone already in financial trouble. The law requires giving them a fair chance to pay. What about B? The principal sacrifice? No. In an OTS, the bank it won't get everything back. They are allowed to sacrifice some of the principal or interest to close the file and save on legal cost. Right? So yes, they have to sacrifice a little bit. Option B telling they don't have to sacrifice anything. No, that's wrong. What about C? Yes, I think C is the correct one. OTS. OTS is not a secret deal make in the back room. Actually, RBI mandate that it must be transparent. OTS must be done transparent. OTS must be done non-discriminatory. That means if the bank offer a settlement to one furniture maker, they must offer the same deal to another furniture maker in the same situation. It's not that this is the bank and to one furniture maker they are offering something, to another they are offering something. No, it must be non-discriminatory. This is the very important principle that RBI mandate. Okay, so bank must have a board approved policy regarding to it, how to go about OTS. That's called board approved policy. This act like a rule book. That the branch manager must follow. The bank also has to tell people about it. That's called publicize it. The bank also have to tell people about it, right? And give the borrower a reasonable time frame. Yeah, you need to give a borrower reasonable time frame, okay, to get the money together. You can't expect a distressed businessman to produce lakh of rupee in just a few hours. How can you expect? So the option number C is the perfect answer. And D says that branch manager hold the absolute discretionary power. No. Actually, this is a manager discretion. If the manager could arbitrarily pick a number, it would lead to favoritism or corruption. Everything must follow an official board policy. So understanding NPA recovery and OTS guideline is a major part of the MSME certification. But do you know that a specific trigger for SARFAESI or versus civil suit? Our MSME certification course, there is their future that's called exam cracker videos that simplify this legal recovery process. Join our community today. Check the link in the description for a special discount on our MSME certification course. So to remember, to have a valid OTS process, just remember this BTS. B means what? Board approved policy. T means what? It must be transparent. And BTP, sorry, not S, not BTP. P means P must be publicized, which means the bank must tell the customer that the scheme exists. So remember, OTS is a settlement, not a surprise. It must be fair, slow enough to pay, and follow the book. Right? Is it clear? Now, next question. The Government of India implemented an interest subvention scheme to provide financial relief and reduce the cost of credit to MSME sector. Okay, this is the information. Now the question is to be eligible to claim this subsidy on fresh or incremental term loan and working capital limit. Which of the following mandatory condition must the MSME borrower strictly fulfill? Yeah, this is the question. That what is the condition they have to fulfill? Option A, that the borrower must be an exclusively export oriented unit EOU with zero domestic sale. Option B, the borrower must possess a valid Udyam registration number and valid GSTIN. Option C, the borrower must have a minimum external credit rating of AAA from a RBI accredited rating agency. Option D, the borrower must be classified as a medium enterprise and have an outstanding loan portfolio exceeding 50 crore. So these are the 4 options they have provided. Imagine there is a micro business owner. Think about it. You can imagine that there is a micro business owner who is afraid to buy a new machine. He do not want to buy a new machine. Why? Because if that machine make the business too successful, they might become a small enterprise and lose all the special micro category government subsidy and benefit. This is called, fear of growing. Think about it. This is also happening, right? If they buy the machine and if the business goes successful, they might jump to the small category and they will lose all the benefit they are getting the micro business. To solve this, government introduced a special buffer. Yeah. To solve this, government introduced a special buffer, right? Buffer rule. So the question asks, what happened to your benefit when you grow into a bigger category? Actually, this is the question. Yeah, this is the question. As per the Ministry of MSME guideline regarding the reclassification of enterprise on Udyam registration portal, what is the regulatory provision that undergo an upward change due to increase in the investment or turnover? So the enterprise immediately loses all the PSL and non-tax benefit. The enterprise must temporarily freeze its operation. Enterprise shall continue to avail of all the non-tax benefit of the category, and enterprise continue to receive the benefit of all its original lower category indefinitely until its annual approval turnover crosses the 250 crore threshold. So this is the question they are talking about. So government has introduced a special buffer rule. If you graduate from micro to a small, think about it. Very important thing I'm talking about. If you graduate from micro to a small, right, or a small to medium, that's called upward change. The word they will use is called upward change. So you don't lose all your old perk overnight. That's called upward change. You were having the old perk of being in micro. You don't lose that overnight. You get to keep all the non-tax benefit. Yeah. So whatever non-tax benefit you were having, you can keep them. Like what kind of non-tax benefit? Like the tender exemption. It may be the tender exemption. It may be the protection against the delayed payment, right, and lower interest rate. So these are the non-tax benefit that you were getting. Okay, so you get to keep all the non-tax benefit for 3 years from the date of the change. So the date it is changed, this is called date of change. From date of change till 3 years, right, you can you get to keep all the non-tax benefit for 3 years from the date of the change. It's like keeping your student discount for 3 years even after you have graduated and started a job. So option A says that immediate loss. No, that's wrong. This would scare owner from away from growing. The government want to encourage expansion, not to stop it. B say freeze and reapply. See, the Udyam portal is smart. It linked directly to your ITR and GST. It is linked directly to your ITR and GST. It updates your status automatically. You don't need to shut down your business to fill out the form. What about D? D again say that until it immediate indefinitely. No, this word indefinitely is wrong. You can't keep micro benefit forever if you are now a medium giant. The 3-year limit is there. Yes, that option number C is talking about. Right, for the period of 3 years. So this 3-year rule is one of the most important update in the MSME sector. If you want to master all these technicalities of the Udyam registration portal and the latest MSMED Act amendment, join our MSME certification course. Our videos lecture are designed to help you clear the exam without memorizing heavy books. So the memory hack let me give you. So to remember the transition period, think of the college degree. Think of the college degree. So you, when you are upward changing, yeah, when you are changing upward, so it means you are graduating. This is called, graduation. So buffer is how much? 3-year buffer is there. Okay, so growing up, you get 3 year of old perk, right? So you get 3 year of old perk to help you settle into new big business shoes. So friends, the remaining question will be covered in our course of MSME. If you want to get access to all these courses, all these questions, you can check out our link in the description section, or you can WhatsApp me on this particular number. Moreover, we have uploaded more videos of previous year question. There's a playlist. I have given link in the description section. You can check out. Thank you. Do join our Telegram channel. The link is in the description section. In Telegram channel, you get to see what are the questions which I have asked. This is the community of aspirants who are preparing for the same examination. Thank you. Have a very nice